Hey friends, it's Miriam Gilmore with True Mortgage Lending, and I am here today to give you guys an update as to what is going on with our mortgage industry, which in turn affects the real estate market as well. And if you're a consumer, you might want to listen in too, because these are things that affect your buying power and the process of buying your home. So one of the things that I've been talking about for weeks and weeks is our liquidity crisis and what's happening in the markets with liquidity and how that is affecting our mortgage rates and our mortgage processes. I'll just give you a little synopsis, which is basically that on the back end, servicers are having issues because of these forbearances that are being put into place, and it just really creates a liquidity issue to be able to sell off these loans to then in fact come back and lend again to new consumers and new buyers. So that's an issue that has been around for a couple of weeks or since this whole thing started, but there are some changes, and one of them is that finally we have been waiting to hear from the FHFA, the Federal Housing and Finance Agency. Mark Calabria is the head of that department, and we've been waiting and waiting and waiting to see what he was going to finally do to help with these servicers, because they have really been feeling the pressure as to what's going to happen if everybody stops making their payments and how that's going to affect them, and that they just honestly would not be able to bear that. And then that in change, and I give you all of this because to let you know how this impacts our purchasing and our buyers, and that's why rates are not as attractive as what people might think that they are. Everybody's like, oh, our rates are at an all-time low. They are. However, these other things are clouding those rates as to what they should be right now, because mortgage-backed securities are starting to be purchased again, and all of those things are happening. But because we have that looming issue with the servicing issues, we've just been in a place of uncertainty. So I think that this is now going to bring some light, because now Calabria just announced that they are going to have a cap of how much these servicers will be on the hook for, which is a maximum of 4 months. So now servicers can estimate and know, okay, this is the maximum of out of pocket that we're going to have. This is what we're going to deal with. So they can really do some good analysis and see what it is that they're going to be on the hook for. So that's a good thing. The other thing is that the Fed is still backing us up and buying the mortgage-backed securities, which is also helping our economy and kind of like just helping us stay afloat with this whole situation. And lastly, I know that we have a Payroll Protection Act that's coming in, a second one. There's about $310 billion that they need to vote on, and hopefully that will pass so that can bring some relief to small businesses and help them further, and hopefully it gets into the right hands. So I hope that this has brought you a little bit of light and a little information as to what's going on in our mortgage lending and real estate, because it's all tied together. And if you have any questions, always feel free to reach out. I hope this helps, and I hope you guys are doing really well.